Okay, folks, welcome to the Contrarian Trader. This is Robert Desmond. It is Saturday, October the 15th, 2011. Let's begin with economic data that was released last week. And initial jobless claims came in a little bit worse than expected. I'll be honest with you, I figured they were going to try to drop it down below that 400,000 mark just to make it look good psychologically. No major reaction from the market on the fact that we came in with, what was expected for the most part. The economy still sucks is basically what this job number is telling you. Retail sales came in better than expected. I don't know whether this is good news or bad news, to be honest with you. They expected 0.6% increase, came in 1.1%. Now, on the face of it, that looks good. But the problem is that you had JP Morgan come out and say, for the most part, they made money on a credit card issuing. So that means that the consumer continues to spend rather than deleverage from the last economic cycle. So that actually weighs on our ability to grow organically in this country. Let's move on. We had earnings on Friday from Google. They came out really good. I would not be a buyer of Google in here. I would wait for a pullback and then perhaps a move higher. Fantastic news out of Google. Just absolutely stunning company. And my hat's off to them. JP Morgan. JP Morgan came out, released earnings last week, which they came in higher on the top line on revenues, yet they disappointed the street due to the fact that their investment banking dropped by 30%. Now, JP Morgan is best of breed. So it's going to be interesting to see what happens next Tuesday when Goldman Sachs and Bank of America are set to report. Now, I'll go into those in a few minutes. Apple is set to release earnings on Tuesday. And Apple, to me, not quite yet, but it's getting there, is a short. It appeared on my short screen on a monthly basis due to it's so far extended at this point. And I'm predicting that you are going to see a continued rally in Apple into earnings. And if they beat and they spike the stock higher, I'm going to entertain it, but it's going to be a long, hard thought as to whether or not I want to pull the trigger on shorting Apple. And I'm going to go into this in much greater detail on a daily chart, weekly chart, monthly chart, intraday charts, because I want to be so well thought out with this trade that when I pull the trigger, I'm satisfied that we did it with good reasoning, because it's such a strong stock, an incredible stock. But unfortunately, the passing of Steve Jobs, who is an absolute genius, has to have an impact on this company in some form or fashion. So we're going to look to short Apple. Goldman Sachs, I just mentioned it. Goldman, it's trading much like the JP Morgan is. It's in a waiting period right now. It's wait and see approach. How are their earnings going to come out? What are the new laws mean for Goldman Sachs? It can't convert back into a strictly investment banking arm. So it's got to abide by these new laws. It's not the Goldman of old. So, and besides the fact that you have the government after them. Bank of America also set to release earnings on Tuesday. I like these charts, but not yet. They're becoming interesting. So it's either going to be JP Morgan, BAC, or Goldman Sachs that we look to trade to get long of. I don't think they're shorts right now, but I think you might see a trade to the upside. I'm going to go into that in more detail with members in the Contrarian Trader Members Edition, which I'll be sending out tomorrow. Dow Industrials. Let's take a look at the markets on overall. Now, I have to be honest with you. When I see these trend lines get broken, as you see here, this has been negated. This head and shoulders formation on the MACD is negated. This is a strong stock performance on the candlesticks, on the indicators, there's one element missing, and it's critical. It's critical. Let's get to it. Volume. There's no volume, folks. So take a look at this. This price action here you saw on Friday. We were able to break through the 11,600 level. We're able to break above Wednesday's highs. See this topping formation here? It set the stage for this move lower on Thursday. And for this market to reverse, of course it's on Google's earnings, reverse and head higher and break through that, that's a great price action. But I find it hard to get net short when there's no volume out there. 70% of all volume on the New York Stock Exchange is computers. It's not retail traders. So there's no participation by hedge funds, by big mutual funds. They're not buying into this. So why am I going to do it? So I can't get all that optimistic until we see some one of two things: volume come into this market, or two, a pullback, and we'll look for an entry point to get long of, and we'll use a stop loss order. And if we get taken out, we get taken out. We'll just keep our losses small. There's nothing wrong with taking losses. What's wrong is letting your losses run and let that trade turn into an investment. That's what's wrong. So I don't mind taking a small loss. I took two of them in the past couple of weeks on TZA. And I'll show you that chart in a minute. But I'm not embarrassed to say it, and thank God I did take the losses. The transports. Transports are confirming the move higher on the Dow Jones Industrials. It's critical to take a look at. If you're going to look at the Dow Jones Industrials, you better look at the Dow Transports on your next chart to make sure they're confirming each other. And they are. Here's the laggard. I already touched upon the other charts. The banks, again, the banks are underperforming. Now, if we begin to see a breakdown on the banks, it's going to put a real question mark on this market's ability to trade to new highs. It really is. If the earnings news out of Goldman and out of Bank of America is positive, then I could become a lot more constructive on this market. Maybe JP Morgan just had a bad quarter. Who knows? Maybe Goldman and Bank of America, they'll cast a completely different point of view on how the landscape is looking out there. So I'd like to see, for me to get net long of this market, the big banks begin to break out. If you see that, then I'd feel comfortable, a lot more comfortable with getting along this market. Next chart is Netflix. Netflix, I've received more emails on than by far than any other stock ever. Did we short this? No. Did we long it? No. We did long it back here, but it really doesn't matter that much. It was a small profit. But it did hit our first price target was 120, which it broke through. Then our next price target was down. I gave a range of 100 to 103. It hit the 103 level last week. Then it proceeded to rally. On Friday, it showed relative weakness versus the stock market. Relative weakness has nothing to do with the RSI, the relative strength index. So I don't think that Netflix is a long right now. Perhaps if we get a pullback to the 103 area, 101 level, then I might take the risk and get long. But I think that we're going to see lower lows on Netflix, especially if this market begins to pull back. And it's overdue, folks. It's overdue, this market. It's been so far extended now. All right, Magnus Semiconductor. I put this on as a extreme oversold trade. I mentioned it in, I believe, last week's commentary. So if you want to go back and you want to take a look at that one, it's on the blog as well. I put this as an extreme oversold stock, and a couple of my members joined in on this one. They made a profit, so congratulations to them. I did not do it myself, so kudos on that trade. So for those inquiring, yes, we did have it on our watch list. It is no longer on our watch list. I think the easy money's been made, so we're going to remove that. So the MX trade is pretty much over and done with. If anything else, more than likely you're going to pull back here. If it puts in a double bottom here, perhaps it's good for a longer term trade, but I'm not really looking at it all that much anymore. WAIR. This is another one. I mentioned this last week, if not the week before, as an extreme oversold trade, and it rallied. And again, I know a couple of my members, this is the only reason why I really even touch upon this now, is a couple of my members traded this for a nice profit. And is it time to get out? I would say, yeah, start scaling out of your positions if you have profits from down here. So congratulations to those members. USCI, United States Commodity Index Fund. I profiled this several weeks ago. And this is a weekly chart. And I said, look for the USCI to hit this support level here. That's where we want to get involved. And sure enough, it hit it. As a matter of fact, I think it was this week here that I profiled it. The week before last, it hit it, reversed higher, and that was your cue, man. Buy it here, stop loss here, and you should have been owning this stock. Now, it's probably got a little bit more upside, so I wouldn't say take all your profits off the table, but you know what? Start scaling out. Okay, TZA. TZA, we took profits in back here. Now, I've traded this, and honestly, I took a couple of losses on TZA over the past couple of weeks. I traded it twice, trying to catch a bottom on the March. Tried to trade it here. We had a small profit, slipped away. We put a stop loss order in just under this 37.45 level and got out. Took a small loss, no big deal. And we let our winners run. We were buying it back here for the longest time. Added when it got into this uptrend, and we took our profits when we saw this reversal. And thank God we did. We didn't go into denial thinking, oh, it's going to come back. It didn't. It didn't. So we took our profits and we got out. So we will be looking to get back into TZA at some point in time in the future. I happen to love the damn thing. It's a great trading vehicle. It is not something that you should hold as an investment. It's a short ETF, 3 times short, very, very volatile. So it's only a trade you want to begin to add in increments, as always, and get out of as soon as you get your profits. You know, you have a decent profit, you see a topping tail like this, you need to know to get out. Next chart is on KB Homes. I sent out an alert to my members on the premium week ahead commentary last week about the housing sector and how I'm really starting to like it. I would like to see another push down on this sector, but we are now watching because the charts are setting up pretty good on Toll Brothers. So we like these stocks. It doesn't mean to go jumping in on Monday and buying them. We want to buy them on our terms, just like we're looking to get long of Netflix on our terms. So we're not going to chase these stocks by no means. They're still in a downtrend. They haven't broken that downtrend. So the probabilities of making new lows are vastly favor shorts at this point. So I wouldn't go jumping in on Monday. If you have any questions, please shoot me an email, and I will talk to you folks soon. If you want to join the 14-day free trial offer, please do so. You can always cancel. And please sign up for the email alerts. And have a great trading week, folks. Bye-bye.